What's going on, family? It's Trader Credit Wiz, and welcome back to Credit Talk 101, where we turn bad credit into better credit and confusion into confidence. Now, let's get into it. Now, today, we're going to talk about what is credit. Just to keep it plain and simple, what is credit? This is my definition because the textbook definition is confusing and is boring. Let's be honest. Now, credit is an individual's personal financial transcript. It entails how financially responsible a person is based on their past and current decisions. Credit is an individual's personal financial transcript. It entails how financially responsible a person is based on their past and current decisions. If that's not the most easiest, the most retainable definition of what is credit, I don't know what is. Self-explanatory. I think it's easily, even if you don't word by word go off of this definition in and of itself, you can just a person's financial transcripts on how they financially go throughout life, or a person's financial transcript of their financial decisions. That's, you don't have to go word by word by this. This is just how I define what credit is. Now, let's get into, now that we know what credit is, let's get into what makes up a good credit profile, right? Now, what makes a good credit profile? Now, you have payment history, you have credit utilization, you have credit age, and credit mix, okay? And I'm going to list them according to their importance. So payment history is the most important thing on your credit report because paying things on time is extremely important. That's what creditors look for. Banks, lenders, investors, they look to see if you are making payments on time, if you're late, if you're not paying people back. They look for things like that. So payment history makes up 35% of your credit profile. It's the most important thing on your credit profile, okay? Secondly, we have credit utilization. How much of the balance that you have that you're actually using? Are you going over? Are you superseding the credit limit? Are you below 10%? Which in the industry we know that 10%, would you stay underneath 10%? That is the sweet spot, right? But typically you want to stay within the 30% range, below 30%. But credit utilization makes up 30% of your credit profile. Okay, so payment history makes up 35%, credit utilization makes up 30%. Okay, now thirdly, it's going to be credit age. And this makes up 20%. Credit age is important. How long have you had credit? How long have you been established of having credit? How long have you been, if you have been making on-time payments, how long have you been making on-time payments? The age typically is very important because it lets creditors and lenders know that you've been handling credit for a while. So credit age, 20%. And last but not least, credit mix. Credit mix makes up 10% of your credit profile. And you say, Trail, well, what is credit mix? We're going to get into that. But credit mix is the mix of different things that the different types of credit that is on your profile. And that's extremely important to have, instead of just having a credit card or just credit cards or let's say, auto loan, and the only thing you have on your credit profile is just an auto loan, or the only thing you have on your credit profile is rent or utilities. Credit mix is a mix of different types of lines of credit that is on your credit profile, and that's something that we're going to get to later. Now, payment history is the most important, and it makes up a huge chunk of your credit profile. Okay, that's why when you miss a payment, it can knock your score down anywhere from 20 points to 40 points to even 100 points, 110 points, 120 points. It's very important to make sure that you're paying your bills on time. You're paying them before the due date. Have your payments on auto pay. This is how you can refrain from having late payments. Also, when it comes to credit cards, you have most people don't understand that you have two payment dates. So you have the initial due date, then you have the statement date. So the statement date is the true deadline for you to make that payment. And typically that may be it could be a week before the actual deadline. Or so the statement date is the day that the creditor reports the remaining balance to the credit bureaus. So that's why it's always good to call the creditors or call the banks up and ask, what is my statement date? And make sure you have that payment paid before the statement date. Okay? Late payment can drop your credit score from between anywhere from 5 to 100 plus points. And the higher the more days that is late, from whether it's 30 days, 60 days, 90 days, that increases. Like it goes up. That's when you start getting to the 100 points. Once it starts getting towards charge off, which means the creditor writes the amount that you owe off, like they count it as a loss, and they write it off as a charge off, which is the second worst thing that you can have on your credit report is a charge off. Uh, that's when you start getting into the 100 plus points. Thirdly, lenders want to know that you can make on time payments consistently. Lenders want to see that you're making on time payments. And when you're making on time payments, you start to see things like this. When you're making on time payments, you will tend to see between 5 to 50 plus points added to your credit report every single month. Now, this can actually come from one account. It doesn't like this, like from between 5 and 50 points can come from one account. So imagine having 5, 6 accounts on your credit report that's reporting on time payments. That's why it's good to have between 8 to 10 trade lines on your personal account that's under your name. Okay, if you notice that you're going to be late on the payment, just ask your creditor if they can delay maybe a week or two, to make sure that you're not late on that payment. Most creditors, they will work with you. Most banks will work with you as long as you're calling them and letting them know. You want to have your payments on auto pay. Make sure that all of your payments are on auto pay so you don't have to miss making payments. Now let's get into credit utilization, which makes up 30%. All right. So the credit utilization is, like I said before, is how much of your available credit have you been using. So the target goal will be to stay under 30% of whatever balance that you have. So let's say you have $1,000 credit card, 30% of 1,000 is 300. Utilization, you want to stay below 30% of your available credit. The sweet spot is typically is below 10%. So people that's aiming for good credit typically aim for 10% or less utilization on their credit card. So if you have $1,000 credit card, you want to stay below $300. Do not exceed $300 on that credit card. That's how you can stay below or at below 30%. If you're aiming to shoot higher on your credit score, you want to typically have below 10% utilization on that credit card. All right. So let's say stay below 30%. Okay. Stay below 30% of available credit. Now, to increase how much of your credit you're able to spend off your available credit, you will have to get higher credit limits. So instead of this $1,000 credit limit that you can only spend $300 on, you will have to go and seek to get more credit cards. So instead of just that one credit card, add another credit card with it, and that's how you can increase your utilization. So if you have a credit card and let's say you have used more than 30%, how you can hide that utilization or that overly charged credit card, if it is overly charged, is getting another credit card, and it kind of like boosts up your utilization. So if you have $1,000 credit card and you spend 500, now you have 50% utilization on that credit card. But if you were to go get another credit card and let's say you that credit limit is 5,000, now you have lowered your credit utilization. Now your credit score go back up, your utilization goes down. Your credit goes up, your utilization goes down. All right. When lenders see that your utilization is high, typically that signals that a person is under financial distress and they're using more and more of their more and more of their available credit. And typically when you're in a bad spot, people don't like to gamble on you. People don't like the banks and lenders. They typically don't extend any funds or any help towards one that looks like they're in financial distress. That's what a high utilization entails. That a person is in financial distress. All right. Thirdly, we have credit age, and it makes up 20% of your credit profile. Credit age reflects how long your accounts have been open or an account has been open. So the longer the average credit age is on your credit report, it shows lenders that you've been able to handle credit for a while, that you've been responsible. Definitely if you're making on-time payments and your utilization is below 30%, credit age means a lot because if you typically have an average credit age of, let's say, 5 years. 5 years is a sweet spot. 5 years credit age is a good credit age to have on your credit report. It shows lenders that you're responsible and your account is stable when you have 5 years or more credit age on your credit report. I'm sorry. 5 years or more. And it shows that you're established and stable. Credit age, when you have 5 or more years credit age, it shows lenders and banks that it shows them that you are established and stable. You have established and stable account. In one of my past videos, credit age was one of the things that kept me, even with a 720 credit score, 4 years ago, it kept me from getting more credit cards, more a personal loan. Like that credit age hurt me real bad. Even though it was only 20%, My credit age at the time was maybe a year, not even 2 years. It was a little over a year, maybe almost 2 years. So if that sounds like you, that your credit age is between 1 year to 2 years, then what you need to do is, or what you can do is start adding, go to rentreporters.com where you can add your rent to your credit report. If you haven't been making rent on time, I would not recommend it. You can go to Rent Reporters. If you go, you can go to your landlord. If you live with your parents or you live with someone, you live under somebody else's household, you can go to Rent Reporters and you can put their name on there. You can also find an individual that's responsible with the credit cards and be asked to be placed on their credit authorized user of their credit cards. That does not mean that they have to give you a credit card. It just means that they're adding you to their credit card for they're just making you an authorized user. That doesn't mean that they have to give you a credit card, though they may be sent the credit card. They may be asked if they want to be sent another credit card. They do not have to give their credit card. Okay, just you being an authorized user, say definitely if someone has a credit card that's been open for 10 years, that definitely helps. So if you know this person is responsible, they don't overcharge their credit cards, they barely use their credit cards, and they're making on-time payments when they do use it, that will be the ideal person to seek, if the seek and ask if they're open to making you an authorized user. So that will help in your credit age. If you can get that, like soon as you add that trade line to your credit report, you'll see your credit score shoot straight up. The downfall of being an authorized user on someone else's credit, that's why I say make sure they're responsible, because if they mess up, if they overcharge, they may have a late payment, it's going to also affect you as well. So that's why I'm telling you, that's why you want to make sure that they're responsible. Last but not least, credit mix. And this makes up 15% of your credit report. Extremely important. Even though credit mix makes up only a small portion of your credit report, if you don't have any credit mix, it's going to be very difficult for you to get certain loans. So even though credit mix makes up a small amount of your credit profile, it can also be the reason why your credit score is low, or it can be also be the reason why you have a high credit score but no one's lending you credit cards. You're getting really low offers on credit cards. If so, it's because they don't know, the lenders and banks don't know exactly how much credit that you're able to handle, right? Banks like to do what they call comparable credit. So if you have $1,000 credit card, don't expect to be receiving a $10,000 credit card. Banks do comparable credit. How much is your car loan? Okay, you making on-time payments on that car loan, and your car loan is 20,000 or 30,000, and so on and so forth. Then you're able to handle maybe a $10,000 credit limit. So credit mix consists of revolving credit. So revolving credit is anything that where you can borrow up to the limit repeatedly. So credit cards, store cards, personal lines of credit, and homes, HELOCs. That's what revolving credit is, right? So credit cards, personal loans, HELOC. These are examples of revolving credit. Next, we have installment loans. Now, installment loans so example installment loans are like mortgages, auto loans, things like that. Mortgages, auto loans, also personal loans as well, student loans. Okay, these are installment loans. All right. So installment loans consists of mortgages, auto loans, personal loans, student loans, fixed loans that are paid off over time. So revolving credit is a balance, is borrowed money that you can borrow up to the limit repeatedly. Installment loans are loans that you pay off, you're paying off within the time, right? Within the time frame. Now, we also have open credit. Open credit open credit is like charge cards. The money is due at the end of each billing cycle. Whatever you spent, whatever the amount of money you spent, that same amount of money is due the next billing cycle. That's open credit. And that's typically credit cards. Credit cards, you'll see this a lot on the business side. Open credit is money that you spent from a credit card that's due, all of it. If you spent $100, it's not like how the revolving credit, how out of that $100 you only pay $20 a month with interest until you pay off the $100 that you didn't use. No, with open credit is like charge cards. Let me change that to charge cards, because charge, I mean, it's a credit card, but it's a charge card technically, right? So a charge card is the same as a credit card. It's just the charge card, the money that you spend, all of it, every penny of it is due on its due date. Not like credit cards, how you only pay a percentage of it off, including interest. Okay, so that's open credit, and then now we're talking about things like utilities, rent, phone bills, etc. So these are your credit mix, right? A lot, right? That's why having a credit mix is so important, because your credit profile need to consist of different things, right? Lenders and banks need to see that you're able to handle different types of credit, different types of line of credit, different types of lenders, right? So revolving credit, you're able to borrow money up to a specific limit repeatedly, like credit cards, personal loans, etc. Installment loans that are due within a time frame. So paying it off every month, and you pay it off eventually, right? Open credit, charge cards. With the money that you spent is due on its due date. And then utilities, rent, and phone bills. All of these things makes up the credit mix of your credit report, and is extremely important. All of these things that I've went over, this makes up a good credit profile. This is how you get into the 700s. This is how you get into the 800s. So now you know what credit is, the true definition of credit in a nutshell. You know what makes up a good credit profile, what hurts you. You know with each category, how important each category. Now, if there's anything on your credit that's hurting you, of anything that I've named, if any of these things are hurting you, any things you need help with, we do have a done for you service at macfinancialteam.com. You can send me a personal DM. We'll just get in contact with me and let's talk about it. Send me a personal DM. Lessons like this helps inform us to make better decisions, better financial decisions. So the more about credit that we learn, the better we can do, right? The more money we can save, the better financial decisions we can make. You learn more, you earn more. So don't just take this information and let it just go in one ear out the other. Utilize this information. If you know that even if you have a good credit score, if you in the high 600s and 700s, and you only have one credit card, you don't have no installment loans, you don't have any auto loans, mortgages, or rent. If you don't have these things, just get in contact with me. I can put you in the right direction where you can add these credit building accounts, where it actually adds credit mix to your personal account. When we went through school, everybody that has went through school, you had a coach in every subject. You had a math coach, you had a science coach, a history coach, a reading coach. Your teachers are your coaches. But when we leave school and we out here and we being adults, Now all of a sudden we feel like we don't need any coaches. The coaches through life, the coaches about finances. And that's why most of us end up in the financial situations that we're in. Is because we fail, we have this pride about us, or even if it's not pride, it's just the lack of awareness of where we are with our financial knowledge, So get you a coach. It doesn't have to be me. It just make sure that it's somebody that's going to explain things like this to you so you can start making better financial decisions. Financial freedom is your choice.